Okay, welcome to a special video on the channel where we're going to talk today about elections. Now, don't worry, we're not going to talk about actual politics or who I think is going to win or lose or anything like that. A, I'm Canadian, so I don't care. And B, I focus on technicals, seasonalities, statistics when it comes to the market. That's how I make all my decisions, not based off feelings or potentially what I think is going to happen. It's all based off of, again, what historically has happened and then using price action on top of that. So we're going to just pop right into it. We're going to go into this presentation I made. So first of all, big shout out here to Y Charts. I got most of the data from them. They do this big thing every year where essentially it's an investor advisory platform talking to their audience and saying, hey, stay invested regardless. So that's going to be a lot of the theme here, and that's going to be a lot of what I'm talking about as well. So as we get into it, I'm just going to go through each of these data points and kind of talk about what I think was interesting. So first of all, this is just a chart of what happens in the overall market. This is the S&P 500, and red is obviously coloring for if there's a Republican president, and then blue is if there's a Democrat president. You can see generally goes up over time with some hiccups along the way when it comes to war or giant financial collapses or pandemics or things like that. Again, generally a nice push over time. This is just to show that if you were someone who's saying, I'm going to be very dogmatic about my politics and only want to trade or invest when this person's president or that person's president, it doesn't make any sense to do that. Another stat that kind of proves that is if you only invested in the SP 500, which generally returns around 6 to 8% a year. When there is a Republican president, you only make 2%. When there's a Democrat president, you only make 5%. So that's your annualized return. Again, doesn't make sense. And this graph, I think, is a perfect graph to talk about this, where this graph is essentially a chart of if I took $10,000 and I put it in the market, if only the Republicans were in. Well, that $10,000 from 1928 until now, or sorry, 1950 until now, is $77,000. Now, if I did it when only Democrats won, $44,000. However, if I just left my money in the whole time, if I kept trading and investing the entire time on running models like we do over at StatsEdge Pro, which just rebalance our portfolio into the strongest names, if you just stuck with the S&P 500 and did nothing fancy, well, now you're up. I'm going to move that back. Now you're up uh, $3.5 million from $10,000. So again, goes to show you, you cannot be that kind of person who's, I'm only going to invest in this time. I'm only going to invest in that time. Another quick way to look at it is this is the charts of how much things win depending on whether or not the Congress or the House is Democrat or Republican. So for example, if you have a divided House with a Democrat president, you end up getting the best return there. If you have a divided House with the Republican president, you end up getting the best return here. So again, just showing that the more conflicting that there's happening in politics, generally the less they do to affect the market, and generally speaking, a better thing. It just shows that if you wanted to be a fully Democrat, you're going to get that 8%. And if you want everything to be fully Republican, you get around 11%. So really not much in the difference one way or another. So again, it doesn't really matter. Now, this is a very interesting chart. This is the VIX. So this is the amount of volatility that's happening on the S&P 500. And you can see based on looking at this from 1992 is when this data started. This is inauguration day, this line right here. So volatility increases up until the election on average, seasonality wise. We're seeing that a little bit here as well. And then as soon as the election is over, you have this fallback where no longer are people worried about who's going to win, who's going to lose, this, that, and the other thing. None of that makes any sense. All the way to inauguration day where the new president is sworn in. And then you have this kind of sideways movement on volatility saying, hey, we know who's going on. The market is now released from worried about politics. Now we can focus entirely on whatever else is happening in the world and the economy. So this is, to me, kind of looks like this. We don't care about politics. This move right here is about politics. And then after that, we no longer care about politics. This sector breakdown I wanted to bring in just to show people that generally speaking, the sectors they think will perform well is not the sectors that will actually perform well, right? So we have Trump, for example, when he was in, I think, again, Canadian, the party line would be manufacturing is going to do well. We're going to build more things and this, that, and the other thing. Well, U.S. growth, which is actually tech, did the best under Trump. And then under Biden, we actually had commodities do very, very well with a 78% return under Biden. So these sectors that you think would actually work generally don't work. So just kind of, unless they have a specific policy that you think will affect a specific subset of the market, you don't want to really worry too much about this, right? You want to just focus on what's happening in the charts, which again is going to be the summary here. Now let's just do some election seasonality. So this is just taking, this is the average S&P 500 chart over the last 40 or since 1950 till date. So it's like 75 years. This is on average, month by month, what happens in the market during an election year. So you can see September, October, you get a little bit of a chop. We're in that right now with the S&P 500, right? We're not breaking new highs, we're not breaking new lows. It's just everything's kind of slopping around. And then after the election is done, regardless of who wins, you generally get that drift into the end of the year. So for StatsEdge Trading, we have a Discord room where the alerts from the algorithms that I make get spit out by an alert bot we have, and we chat back and forth. And I actually just made a note and said, hey guys, we have a big election tomorrow. It's very, very close based off of everything that I can read. It seems like the more sure an election is to have a certain event, the less all of this matters. The closer it is, the less anybody knows what's actually going to happen, the more that this matters. So I just said, hey guys, I'm gonna wait till Wednesday. I'm going to take today off. I'm going to take tomorrow off. I'll keep a eye on the market. Maybe if I see a short-term trade I'll take a shot there. But there's nothing wrong with that. Just saying I'm good, right? I'm gonna chill out until the market figures out what it's gonna do. So this is a breakdown of what happens to the S&P 500 from 1928 after the actual election day. So we have this line right here that shows the election day that occurs. The red line is what happens if a Republican wins. The blue line is what happens if a Democrat wins. You can see right after the election day, on average, if a Republican wins, you get a nice pop up for the next 2 months. And then generally things 12 months later don't look that great. However, from the Democrat point of view, you have this kind of chop or consolidation, and then you get the push. So the fact that the resolution generally seems to be higher makes perfect sense based off what all of the data that we saw was, right? Because regardless of whether it's Democrat or Republican, market goes up on average. In this particular situation, what you have is a kind of delayed start on the Democrat side and a bit of a run, maybe too fast on the Republican side. That to me is something actionable, right? If the Republican gets in and we start to see this move, then that might be something that, hey, there's a quick momentum trade to get on, but I don't want to get involved for very long. And vice versa when the Democrat wins. If there's a pullback, well, I know if when that pullback settles and resolves higher, maybe based off the seasonality, we'll get a move that looks like that. And then this is just the election day, and this is regardless of who wins, right? The election day, and then regardless of who wins, one way or the other, you have a push up into election day, which we saw, some consolidation around election day, which we're seeing. And then after election day, a couple months later, is when you start to get that drift higher. And that would line up with the seasonality of November, December, January, February. Next year ends up being where the crux of it goes. And this light blue line is what happens just normally in the market, right? Just so you can see it doesn't deviate too much from normal market seasonality and normal market behavior, regardless of who wins. So again, regardless of who wins, as a Canadian who doesn't care, my game plan is I'm going to run my algorithms. I'm going to put those algorithms into the alert bot so that I'm alerted because I'm using it now as well. It just pings my phone from Discord and says, hey, look, this name that came through your algorithm that you filtered using your own eye and using your knowledge as a CMT hit the price that the algorithm said you should look to get involved. Makes my day way easier because I'm no longer staring at screens all day. I'm just waiting for those alerts to come in. So if you're interested in that, if you're interested in not caring and not trying to guess which politician is going to be good or bad for your portfolio, then come on over to StatsEdgeTrading.com. Try to trade with algorithms and statistics like we do. It is mentally freeing, certainly. So come check us out, and I'll see you guys. Maybe not tomorrow because it's election day. I'll probably be off somewhere, but on Wednesday I'll see you back. But make sure you always pay attention to the Substack, because tomorrow there will be a podcast from Line Your Own Pockets that I'll send out, and I'll see you guys there.